Hello, everyone. Welcome to another episode of the Index Podcast, where we come together every couple of weeks to discuss on-chain data, chart crimes, and metrics that move the crypto industry. Today, I have with me Hilderby, resident data wholesaler at Dragonfly.
Hello, everyone.
Denning, chief on-chain sleuth at Pantera Capital.
Hi.
Data dashboards, or Dash, Janitor at Paymentscan.
Hello.
And I am Boxer, and I am the community powers at Dune. Before we start, nothing we say here should be relied upon as legal, financial, investment, tax, or even life advice. We're acting independently of our respective professional roles. And with that, GM Dash, very happy to have you here. This episode will be just vibing a little bit with a fellow data analyst. Dash is currently very deeply entrenched in the data trenches. Man, what a sentence. But maybe... just to get started off, I think some people are now familiar with you with your recent prediction market work, stuff like this. But maybe just how do you end up here? How do you have this kind of spot in the crypto data industry?
Sure, yeah. I mean, I've been doing crypto data for like 3 to 4 years or so, largely anon, and I decided to spin up a Twitter and start, talking about data. Originally, I was trying to track protocols I was interested in, like Uniswap, and doing fully fledged, dashboards for their new product releases. But I quickly realized I was spending a lot of time and not getting much motion on Twitter. So I started just doing singular queries and seeing how teams would react. I pulled Kalshi's data off of their API. I put it into Dune because I was too lazy to build a front end. And then Tarek and John Wang from Kalshi started engaging a lot with it, and that 5 minutes of work ended up getting like 2 million impressions or something. And I was like, all right, I guess I found where I need to spend my time. And I started building out a brand around there and uncovering more insights on prediction markets.
Okay, very cool. So you're essentially just kind of repeating this back. You were at some point finding yourself looking to build an audience on Twitter, and you kind of like threw spaghetti at the wall, and prediction markets is what finally kind of stuck.
Exactly.
And what work did you do there specifically? Just kind of like comparing Kalshi and Polymarket, or what kind of work was this?
Yeah, I think the thing that really started taking off quickly for me was comparing Polymarket and Kalshi. That was, drove a lot of attention, and they were both at each other's throats throughout quite a lot of that. So it ended up being very good press for me, and then I just started adding in, a few more prediction markets. Yeah.
Okay, I see. What else are you working on at the moment besides prediction markets?
So me and my co-founder launched a website called Paymentscan. It tracks crypto card spends, hopefully top-ups, the infrastructure providers, all sorts of different things. But yeah, just grinding away at that and the prediction market work for now.
Okay. I mean, that's plenty to cover. No easy feats. Maybe your name is very, I would call it, unique. How did you pick this name? And maybe also, I think there was a different variation of this name at one point in time. Maybe you want to quickly elaborate on the story.
Sure. So, originally my name on Dune was Dune Data before I'd blown up at all, also on Twitter. And the idea was quite simple. All I wanted to do was make Dune dashboards and do work on Dune for different, companies and show some of these insights. I'm pretty uncreative, so I chose that as a name. It started getting misrepresented as it being Dune's data. I thought it was great from the marketing perspective, like, oh, we need a Dune data dashboard. You would say my name. And so I changed it to just be data dashboards after the Dune team were a little unhappy with me.
I think Dash, I can live with Dash, That's, I think we should keep it at that. So,
I don't plan on changing it again, don't worry.
It was not a fun time. Like some customer that pays us like quite some money. It was like, why is this data that you're uploading not up to date? We're like, this is not us. Like, this is what the hell? And I was like, we probably need to ask him to change his name or work together. But anyways, you have quite some. Oh, go ahead, Danny.
I was just wanted to address that. I think
his dashboards where Kalshi's data was updated was kind of a moment. I think Mark said Dune is now kind of like the front end, and like from there, and I've seen many more like prediction markets data that are just doesn't live on chain. Is now getting somehow wrapped around through either DeFi Llama or like just like some API is back to Dune now, and it kind of caused some confusion. But I also think like it's somewhat healthy in the way it's pushing those projects to push data on chain. But yeah, I think that was like really crazy that, like we all data analysts consume data from Dune and you put data up there. And now that's where everybody's looking at comparing those two projects.
I didn't intend for it to be portraying, Kalshi as a crypto company or something like that. Again, I was just lazy. It was going, trying to do something as fast as I can to see what's working, like marketing wise. And I just, I had never done any front end. Wasn't too keen on doing indexing or managing a database back then. And so it was the easy solution for me.
Yeah, that makes sense. I feel like Kalshi really, they were very happy that they suddenly looked very crypto native. Let me say that. I feel like this was, them like somebody just uploading data, and then it kind of like for the untrained eye, it would look like this would be on chain. But of course, this is not your fault. This is just kind of like the context of Dune would imply that something's on chain. But I think like now, like 6 months later, I think a lot more people are aware of like the limitations of that and everything. But like the initial wave was definitely like, oh, is Kalshi suddenly on chain? Like what's happening here? Nobody really knows. But yeah, maybe we can dive into some more specific like themes inside of prediction market data. We just had was it the last episode? I think the last episode. We discussed some prediction market data, so we can just kind of like revisit some conversations from that. I think Dobby, if you wanna pull up the dashboard really quickly, and then do we have anyone in the room who can explain why notional volume is not a bad, or like is a bad metric or is not a bad metric? And like for that, we first need to state what notional volume means, and then kind of like go into okay, what does that actually entail?
Yeah, so notional volume is the counting of shares traded rather than the underlying dollar volume. And with complementary tokens or these these prediction market events, these complementary tokens are issued. One of them will resolve to yes, one of them will resolve to no. That means for every 2 tokens, one of them is resolving to $1. So notional volume is the counting the shares being transacted across a prediction market. And, if you have a 100 share trade, that means you also have 100 shares of the other side of a complementary token. One of those sides will resolve to $1. If you're going to remove one side, for example, the taker or the maker side, then you can actually assume all of those contracts will resolve to $1, which is why, Polymarket, for example, was putting the $ in front of their notional volumes before I even got there. And same for Kalshi. My problem with notional volume as a metric is that it breaks down when you have a direct trade. That's to say, if I sell 100 yes tokens for $1 to someone else, that's only $1 of volume, but notional volume will count it as $100. And so putting the $, I feel like is pretty misleading. I've got the $sign there. That's just because, there's no real formality around this, and I don't want to confuse people even more. But yeah, that's my problem with notional volumes, that can get easily inflated. And then as well, you have the negative risk markets where you can convert one yes share to a no in every single other outcome. I've not particularly investigated how that impacts notional, but I'm, pretty confident it does inflate it as well. And so I think notional is like honestly a terrible metric, but the only reason I present it with the $ is because based on what's accessible to me via Kalshi's API, that's it. I could present take aside regular volume, and that is probably actually the best thing to compare. But I'm doing notional for now, and everyone wants the highest number, so everyone wants to talk about their notional number and push that, right?
Yeah, it's the TVL of prediction markets. Maybe just to clarify this, if I buy $10 worth or like $1 worth of or like shares that currently cost 1 cent, and I buy just $1 of them, then I've bought 100 shares. So Polymarket will count this as $100 of volume. Of course, like this will hugely inflate the volumes, especially as markets kind of like close down.
Yeah,
Was
it's
that
not
not
as
correct,
simple as
Danny?
that. That is correct though, but there's 3 types of trade. There's position splits, position merges, and regular direct trades. I'm talking about direct trades in this instance. With the splits and the merges, there will always be someone on the opposite side, and it's actually 1-to-1 with a regular volume. And these splits and mergers are actually what creates the open interest or the collateral that sits inside, Polymarket, for example. And just so you just to be clear, I know Kalshi offers the direct selling of shares to someone else without sort of this merge or split idea. So it's not like Kalshi is exempt from that.
But the splits or merges are like internal Polymarket operations, no?
Yeah,
like this is just like how
I more meant the type of trade. Like Kalshi, of course, doesn't have a smart contract, but they do offer, for example, a direct sale of 10 yes tokens between me and someone else that is, let's say $10 worth of yes tokens, but maybe it's 100 or something like that. It will be counted as 100 by Kalshi, notionally, if that makes sense.
But the difference here being that like Polymarket has you can break down the data, and then Kalshi only offers notional volume through their API, right? So you have to do notional volume because they only offer that.
I was just going to say, or take aside regular volume is possible, which is just timesing the shares by the price that they're executed at. I believe that's possible by Kalshi API as well.
And have you ever talked to them about them sharing traded volume, or what we just call volume essentially?
I've not talked to them about that, but I mean, I've asked about users and fees, if I'm not mistaken, but they were not willing to share that. I sort of think they're only sharing what they want me to have access to.
Yeah.
So yeah.
All right. So you can't really. So there's going to be a lot of charts on your dashboard here that, unfortunately, have all the on-chain prediction markets, but not Kalshi.
Yeah, that's why when I can't make a direct comparison, I just leave Kalshi out. So that would be regular volume and regular users, for example.
All right.
I got quite confused in the beginning when you explained it. I thought the notional volume over reporting thing was kind of like by 2x because you're counting both taker side and maker side, but it's actually counting. Okay.
So that's a separate problem, which was that you storm flagged it. There were a lot of places reporting Polymarket's volume as both the maker and the taker side against Kalshi's only taker side. My chart was not doing that because I was quite aware that Kalshi wasn't posting both sides of a trade. So I was very careful with my notional chart not to have that problem. But, that segues into the regular volume chart I have has been accused of double counting, which I think is actually a very fair criticism from Storm. But it's sort of a hard thing to explain to someone in a intuitive way. So I've left it as it is. And when I say that, I mean, if you have a maker who puts up $50 worth of tokens and you have a taker who, takes it with $200 worth of tokens, I'm counting that as 250. Storm's argument is not only about notional, but also regular volume. And he's saying I should be counting that as $125. And I actually, through talking to him quite a lot, I've come to agree with him. But explaining it and going back and forth with every single team who's just an on-chain, prediction market, it's very time-consuming, and there are a lot of arguments, and I just feel like I'm repeating myself all day. Whereas with the notional, they know, like, it's clear-cut, I'm reporting it against Kalshi in that way, it has to be done that way.
Right. So I think like all of us probably agree that the reporting volume issue you just addressed should be counted half or only accounting at the taker side, right? Like Dolby and Boxer, you would agree, like we probably shouldn't count both hands of the taker and the maker, while the other one is only counting the taker, or at least they should be consistent, I think. I was really surprised that the notional volume actually is basically saying they are counting the share rather than the US dollar value, but they're presenting it as US dollar value. That was crazy because it will be like 100x or...
Well, you can have as much as 100x inflation on a given transaction. I think it's actually 50x, if I'm not mistaken, off the top of my head. I wrote a thread on it. I can link that to you after if you're interested. But I might be slandering Polymarket a little bit in that, so I'm trying not to share it around too much.
So in the case of like a 20 cents and 80 cents, so basically 20% probability, and there's 100 share matched, that resolves to how much US dollar and how much is being presented in notional volume.
Well, it depends on the type of trade. In the type you said, where you've got a 20% being matched with an 80%, you're matching the yes side of the book with the no side of the other book, or the yes of the other token. It's quite confusing. So you're actually at the same time as the other person you're buying. So that would be a buy-buy transaction. That's what creates open interest. In that, you would have, like, let's say it was 100 shares, like 100 maker, 100 taker. Both notional, notional would be reported as $100, and the regular volume should also be reported as $100, although my regular volume is not doing that. You have a sell-sell. That's also not got any problems. But you do have a buy-sell transaction, i.e. this direct sale I was talking about earlier. And that does have this problem where the notional is inflating it and it's deviating from reality. I mean, also, it's generally, even if you want to make the argument that, $50 on a maker side plus $200 on a taker side should be $250, Polymarket makes that argument, and they still actually, in doing so, are double counting the buy-sell transactions.
But so I think to also answer your question, Denning, if we look at the data for just Polymarket in terms of comparing notional volume to volume, it's about a 10% drop from notional to actual volume. For Kalshi, though, we have no idea because we only have notional. They've never shared anything, so it's only guesswork on that front. Yeah, that's at least for the latest 2 weeks. According to Dash's dashboard.
But remember, the regular is both sides. It's taker and maker, whereas the other is only one side. So it's halved as well. Which obviously, doesn't look great.
I think this is getting a fairly complicated discussion for a podcast without any visuals usually. I think it's fair to say that notional volume is the only metric that, or taker side notional volume is currently the only metric that we can compare across these different markets, including Kalshi, because Kalshi only exposes that via the API. So that's the metric you can use. Then we can use open interest, which we can maybe get to in a second. And for the normal, quote unquote normal volume, there's essentially a school of thought that follows, or not a school of thought, but Storm, the data analyst from Paradigm, has put out a piece on this is how I think we should report this, because there's a lot of internal operations essentially, and the way these markets are structured, you need to discount some of the volume and look at the taker and the maker of the individual trades. I think Dash has not done that in this chart here, so we would also kind of need to take a look at that. But anyways, I think long story short, all of these volumes are pretty hard to compare because there's a lot of kind of internals of the prediction markets that just kind of it's the market making mechanisms or something like this, or the way, not the market making in terms of there's a Wintermute sitting there and doing the market, but just the mechanisms of how these tokens interact with each other cause quite a lot of volume to be settled. I think frankly it's kind of the same as comparing DEX volumes and DEX aggregator volumes or DEX volumes and NFT volumes. None of this really makes sense. I think we just as an industry we just need to find one standard. and then kind of like align on that and like report every market the same way. I think like looking at the specifics of like, yeah, I think Storm probably has like the most right approach, or like it makes sense, but also you can make an argument for like just doing notional volume, because like if you look at traditional stock markets, you also just like, I think option volume is reported as notional usually, because that's what they resolve to. So like I think there's like arguments to be made for multiple sides, but essentially it's like it's really, really hard to compare the whatever 6 billion of notional volume in prediction markets with the 6 billion of volume in DEX trades, or 6 billion of volume in NFT trades. Like that's just a comparison one should not make. That a comparison you can make is like between whatever Kalshi and Polymarket, if the analyst who does this analysis actually kind of like takes into consideration like the normalizing the data between the different things, which Dash does here in this dashboard. But with that, I think let's maybe move on to like, yeah, go ahead.
I definitely agree. This is like a data plumbing issue and not necessarily like super deep thing that everyone should know about other than analysts. But like, I do think though, like that Polymarket presents all its data because it's decentralized, whereas Kalshi only presents the data they want, which usually when this is the case, that's like, we only present the data that makes us look good. That's pretty industry standard of like, hey, I only share this data, not granular. But yeah, whatever. I wish they shared more though, so we could actually dive more into Kalshi and make better comparisons between the two. But there's another metric that I do have one question for, and I've been puzzled about this, which is open interest. And I was wondering if you knew what was going on with the Kalshi data. There's this huge, like in 2024, end of 2024, there's this huge influx of open interest going from like 12 million open interest to reaching like 500 million, and then suddenly dropping back down to 35 million. And it seems very, very weird.
So obviously you can see like these sudden drops that look like anomalies. Not the big drop, but I'm just saying the small white bits missing. Yeah. That's just because Kalshi's missing certain days in their market data, APIs and whatnot. So you can't fetch the data for those days. So those are all the little white drops. But the big drop is when Kalshi decided to stop counting open interest as funds. Well, not funds, but they were counting open interest of closed markets. So they stopped doing that. Right. And that's the sudden drop. So I tweeted today that they hit an all-time high in open interest. They've probably been at an all-time high for quite a long time, but I was not going to explain that on Twitter.
Yeah.
But what's a closed market?
Like the market's like finished.
Resolved. Oh, like resolved. Yeah, resolved. I see. But then the money just sits there? People don't withdraw?
It's not sat there. It's just from my understanding, they've just like taken the value it resolved with and added all of those together plus what's currently active and said this is open interest.
Kind of like they never like even if I withdrew my money and like put it into the next bet, they would have just reported that as open interest.
I believe so, and I remember watching the podcast of an episode where you were talking about it, and you thought it was I think Nevada Gaming Commission or something sued them.
Yeah,
this is why. No, it's not.
We threw out a bunch of theories.
Yeah, no, it's a weird one.
Okay, that's very
weird.
interesting. But yeah, I'm very interested how this chart looks like for the Super Bowl. Like specifically, probably like a huge interest spike for the last 2 days.
You can see that spike here. I think that probably.
Yeah, but that's just leading up to it, no? Is this updating? Oh, this is not a weekly chart. So this is actually So this spike is related to the Super Bowl. I see.
Yeah. Because Kalshi still has over 80% of its volume being sports related.
Okay, I see.
So yeah.
Maybe Danning reporting from the ground in the US. How many Kalshi ads are you seeing on your Instagram feed?
Not today, but last week I've seen it through multiple channels on my YouTube, on my Twitter, on even my Venmo, where they say, hey, you can deposit from Venmo. And I looked up at the sky. I live in the Bay Area, and there was Jets ads, like printing clouds of Kalshi.
Yeah, the European mind cannot comprehend. Yeah, so essentially we're still kind of like, I think that finishes prediction markets. Maybe what are you looking at specifically at the moment, Dash? Is there any like recent development that you think is super interesting, or anything new that you think is worth sharing?
Well, I've been looking at the crypto payment cards quite a lot. I felt like it was a pretty underreported sector. It looked like it was going to be potentially a lot of transactions. So I, along with my co-founder, we did the indexing, built a database, built a full website for it. And that's called Paymentscan.xyz. And yeah, that's what I'm working on. And I'm trying to find more time to work on to continue on the prediction markets as well.
Okay, so I'm showing the website here. Do you have can you quickly run us through it, I guess, a quick overview of it?
Sure. I mean, I think this is the most important page, the overview. You can see how much volume is going through each of these cards in terms of spends. There's also user numbers, transaction numbers. We've got Solana up there as well. And then if you click on to chains, just below overview, you'll see we've also broken it down by the settlement layer. That's not necessarily, that's maybe a bit complicated. But for example, with certain protocols, you might do a transaction on Solana and it gets relayed to like Polygon or something. And Polygon is where the settlement's happening. So this is all based on where the settlement happens. You'll see scrolls dominating. That's because EtherFi is doing so well. And we also have the currency section. I think those are the main sections. A lot of people are interested as well in the infrastructure providers. So we've added those on the left. We've got Rain and Fiat24. Hopefully we'll get Re.Pay. Rain is also our best assumption. We've not spoken to the team too much. We're trying to get in contact with them and track them as accurately as possible. For now, overview is really where we take the most care in reporting. And we make sure there's nothing there that we're not very, very sure about. And right now, all of this is pulled directly from the chain, except for Avicii. We use their API that they use for their nbanks.org website.
When you pull the data from Onchain, how are these like cards labeled? Like, do they have a specific smart contract, or do you have to build up some methodologies to try identify them? I imagine it's hard.
Yeah, it's very hard. Everything requires its own methodology, and sort of actually our biggest blocker is getting in contact with more of these teams and having them talk to us, because we've got actually quite a lot of capacity engineering wise to ship more cards onto here, but it's that some of them are quite private about it and they don't want to share too much. I think others just haven't heard of us, and so I'm trying to change that, report the sector a bit better. Hopefully as well, if it's got a bigger Twitter presence, it actually incentivizes cards to come and share so they can get put up and benefit from the marketing exposure. And so yeah, I mean, on chain it really depends on actually the infra providers for the most part. Like Rain's got its own structure, Fiat24 does as well. So those are the sort of main methods you have to break it down by. And for the most part, there's just smart contract addresses which are processing them for different cards, but you don't know what the smart contract, like which project the smart contract is related to. So that's the hard part. And as well, like we found some of the smaller ones like MetaMask or whatnot, we found already like analysts on Dune who had done work there that, gave us the pointers into finding the data. That's sort of what got us started. But now we're really trying to make sure we vet everything with each team as we go, especially because we're now, we've got Polymarket about the volume. So we've got to be really careful not to put anything wrong up. And then same as well, we're featured in the block. We're powering the flows part of their website. So, there's other providers relying on us to report it accurately. But for the most part, that's just that overview section. So we still have stuff we play around with, like the Rain infra provider, where it's less rigorous. I mean, I still think we're absolutely correct on that, but it's not vetted.
And one thing is there's different types of payment providers. Essentially, like there's going to be a lot of them here are public and smart contract based and based on public blockchains. But there's also some that settle either on their own blockchain or own infra, like I'm thinking of like Payayy, which has its own blockchain. Like, how is there a path to having like aggregated for the data for them, or do you think there's maybe never going to be some data for them? What's your thinking here, and how could those be represented?
Sure. I mean, with the privacy-based ones, they're obviously, that's, part of what they're trying to sell. So they're not going to be too willing to share it with us, but we're hoping they will just be able to feed us an API, and, they're tracking it all themselves. Maybe they don't want to share exactly the proper methodology to us, but if they could provide us with an API, we would like to add a privacy section. Some of these cards as well, they deal in, top ups, but they hide the, actual user level spends. I think Holy Held is an example of that.
Okay.
Or at least you can't see the spends for Holy Held, but you can see the top ups. So there's a bit of juggling as well between like the spends and top ups. We tried to document it all in the about sections though. So we would love to break it out into here's custodial, here's the cards powered by Visa, here's the ones by MasterCard. Like that's the goal long term.
Yeah, because one of my issues with some of them long term is, for example, I think it was the case for EtherFi, but I don't know if it still is essentially you see someone paying with EtherFi at like a coffee shop, and you can basically trace his whole account because you know how much he paid and when. Just look at that transaction on chain, and you got the whole account and the whole. I don't know. It feels not great privacy wise as a card user, and I think not many users are aware of this. So I feel like eventually we head into a space where most head for privacy preserving solutions, and it probably becomes more of a headache for you as well. So yeah, I don't know. I'm curious in how that space evolves in that sense.
No, I agree. I just I would like to report the numbers. I don't want to report user level things too much. Just something that I've thought about is, payment cards are probably the hardest thing to Sybil attack. So I think you might have some quite interesting airdrops coming off of the back of this, ones that actually are meaningful. And so I have thought about getting user level data and having sort of like, on Dune, the, airdrop checker dashboards are quite popular. I thought about doing something like that here, but I thought, that's maybe a bit too revealing on a user level for some of the people. So I've chosen not to do that.
I'm wondering if there can be metrics to measure the profiling of the user base across different cards. Like imagining, say, one type of card have users who are actually using it for much more smaller micro payments, or like even also like cross-border payments. I'm not sure if that happens with the cards here, but others might be having like bigger users or even institutional user. I'm not sure. Or even like, I wonder if you are able to track all that information. I guess no, right? Like where they have, like they went to the coffee shop or they were shopping online for clothes but that would be really interesting. But yeah, like overall, what are the merchant ecosystem or landscape look like? Just more like a supply chain type of view.
Right. Yeah, I don't think most of that information is not available to me. I also don't think a lot of these companies would be too willing to share it with me.
Yeah.
It makes sense for privacy reason. Yeah.
I think how does this data transpire like on chain? It's just like you like stablecoins move from a user's wallet or user's kind of safe towards some kind of like off ramp, right? Like that would be my assumption, or like one kind of account that belongs to whatever, like Holy Held or MetaMask or whatever, and then it's just from there they settle this on the Visa network. Is that kind of like roughly how I can imagine the structure?
Yeah, I think I would say a user registers a card. The provider creates a collateral proxy wallet or a safe wallet. The user then deposits to that wallet. They are credited that balance in the card. The provider has control over that safe, and then as they spend, removes the funds, and it's managed more like with the backend than completely directly on chain. like the limitations of what you can spend, I think are more dealt with using a back end. And that seems to be the way they do it. And then I guess, the infra providers are off ramping it, at which point they settle it with, Visa or whoever.
Yeah, that makes sense. And I think if we actually start looking at the data, it seems like EtherFi, if you go back to the overview here, Dobby, EtherFi seems to be dominating the market with about, I don't know, it looks like 40% market share. And then the rest is essentially split up by multiple small providers. Have you looked into why EtherFi is so dominant in like at all, or is this like a mystery?
I have not looked into it too much, but I think they are. Actually, I have not really looked into it. But I will say something interesting is if you go to the overview and you've got the little selectors. If you swap it from volume to users, it tells quite a different story, and you see it's actually BitGet's distribution, which is one of the biggest ones. But obviously they're not represented too highly on the volume side of things. And so there's some interesting dynamics going on. I can't say why EtherFi does so much volume. But yeah, I guess you've got, like, for example, a lot of casual BitGet users.
It would be interesting to add some like median or average payment per user per week or whatever to get a sense of how, not super granular, but a sense of how these users use those cloud providers, because that would lead to me to believe that BitGet does a lot of smaller payments, whereas maybe EtherFi has very few users who do large ones. Not very few users, but a few users doing large ones.
Yeah, that's a great suggestion. I mean, there's obviously some nuance I have to deal with. For example, like some things are top ups rather than spends. But no, I definitely like that suggestion. It's something I'll talk to my co-founder about implementing. So I appreciate that.
My suspecting theory is that BitGet is a company based in Asia, and it's possible that just like this total volume thing, right, like matters by geolocation. If you're spending in Asia, the amount might be smaller. And like I've heard people actually independently like telling me about like EtherFi card as the best card because like the cashback and also the exchange rate are good. I haven't myself verified that, but like I heard that from like Westerners, so I assume maybe like there's exactly like the, I guess, a median or like spending distribution difference there.
The cashback is higher for EtherFi than BitGet, yeah.
Yeah, I definitely think that's got an impact. I think as well some people are using it because it's less restrictive in what they can swap into and the amounts and whatnot. So that also plays a factor into it.
And EtherFi also seems to allow you to not sell your assets, but rather like you open up a borrow when you pay via the card. So like I think like maybe some whales are just kind of using this to fund their lifestyles while the bear market is happening or whatever. So like I think there's also like some dynamics there that we might have to take into consideration.
100%. I think that's a great argument as well because it's like in certain places you can actually avoid tax by doing that. Like you can roll your tax, duties over into the next year by using that.
Yep. Yeah, it's like the rich, like that's how Elon Musk famously avoids taxes, right? Like he just never sells. He always just takes like gigantic loans against his equity positions. And then it's like, yeah, I've never sold the assets. So like you can't tax me on like the gains that I've made on this. Which probably like there's a, like, I don't know, I should look into this. Sounds interesting.
He also only make $1 of salary, so he doesn't have salary income tax.
Yeah, exactly. It's pretty smart. Everything is just, he works all the time, so everything is a company expense.
Another thing I noticed is when looking at the currencies, in most cases we'll see USDC and USDT dominate. That's like the stable coins of choice in majority. Maybe DAI in other cases, but not here because I guess there needs to be some centralized rails anyways, so doesn't matter. But what I do see though is that we have some other currencies, and I'm seeing like some euro stablecoins as well as pound stablecoins, and maybe there's others in the further breakdown. Are there like specific card providers that do transact in those preferably? And yeah, can you do you have some insights there on what's
Sure.
going
I'm
on?
not sure about particularly on a card provider level, but in terms of infra providers, actually, one thing we're looking at getting added for Fiat 24 is mantle chain support, and they actually have some volume regarding like Chinese yen and Hong Kong dollar, and so they are actually, I think they power 7 or 8 different currencies, and so, but 4 of them, like the newer ones, are on a mantle based because I think they power Mantle's card UR, if I'm not mistaken.
Mhm.
So yeah, that's and then I don't know. Some of the others are just a bit random. I guess maybe they involve certain benefits and it's done on a per card level.
I think a helpful visual on that exact topic would be like a Sankey diagram, where to show like this card is flowing towards this type of currency, and like to see the distribution across that 2 layer.
Another great suggestion. Yeah, definitely.
You've got it from the Sankey diagram queen who made a I forgot how it's called. Damn, what was the
Order flow
website name?
art, yeah,
Yeah.
yeah.
So essentially this before Dexes.
Yeah, I've seen them popping up a lot. I think DeFi Llama added support for them recently or something like that for the yeah.
Artemis has that too, yeah. Anything else coming up in the roadmap for Paymentscan?
Well, hopefully Re.Pay, hopefully some more big infra product providers. We'd love to add as many cards as we can, but they've all got their own timelines. Some of them, don't respond to us. We're not particularly big Twitter accounts. For now, we're just trying to grow the Paymentscan following, grow awareness to it, tweet about it, and then, some of these smaller cards have an incentive to come and share with us. And also, hopefully, we get integrated in a few more, front ends so we can power other places with bigger audiences. Those are sort of our main goals.
Are you aware what are the biggest cards that are missing by volume that you're actually reaching out?
It's hard to say. I'm sure Rain has like a breakdown of every Rain card. I think we've got most of the big Rain ones. I think Re.Pay has a native card, like their own card, and I think that might process like quite a lot. So we'd love to get like Re.Pay is a big one for us.
What about Coinbase? I've seen people using that here.
Oh, well, yeah. I mean, there's also Gemini's got a card, Kraken's got a card.
Right. Right.
So yeah, I would love to get them up as well. But just looking at BitGet, it's not like the BitGet card does particularly large amounts of volumes just yet. It's got a huge user base, so it's really hard to tell. And I also think that, I feel like the infra providers are sort of the more important connections for us to make because they actually know all of the contract addresses and which companies they're relating to. And so if they're very open, they can actually just share everything with us. And then we can ship, 19 cards onto the front end in a day, and suddenly it's completely different, right? So yeah, and I know, for example, Kraken doesn't settle on chain, so I would have to get like an API for them, and so I'm not sure with Coinbase or Gemini whether I can pull it directly from on chain, and that's something I want to be a little bit, flag a bit more because obviously we saw with Kalshi just a moment ago that sometimes what's reported isn't necessarily completely accurate.
I have a final suggestion, or essentially, back a few years ago, there was also Binance and Crypto.com had cards which were pretty big in the crypto-related, I guess, terms. But there was one thing I noticed is that they had huge cashbacks, but obviously those depend on what tokens they're given on. if you give, USDC, then those cashbacks, they retain their value over time. But Crypto.com, for example, gave it back in CRO, their token, which was ever plummeting. So it's a nice cashback if you convert it on every sale right after. But if you wait a month, you basically, it's not really cashback in the same sense as if it were USDC. Maybe some indicator of what the token is used in terms of cashback would be cool to have on some place on the website.
Yeah, that's a really great idea. I'll definitely get that added as well. No, I mean, you guys are always welcome to give feedback. Like, we want to make the website as good as possible. We want to showcase what people care about. And so, I'm always open to hearing this and very appreciative. So thank you.
Yeah, we all know how hard it is to actually add these things. It's always easier, much easier said than done, figuring out how the hell Crypto.com was settling their transactions in fucking 2021. Like, who the hell knows? But yeah, still, like, would be interesting information. But, like, I don't know. It's always much easier said than done. With that, I think we're coming up on time here. Thanks so much for chatting with us about your data adventures, Dash. It's been a pleasure. I think the Polymarket and Kalshi work has been very insightful. Kind of like you've really pioneered like a whole new kind of wave of dashboards and data reporting there. Very, very, very cool to see. And yeah, best of luck with Paymentscan. I mean, it's already a great resource, but getting those connections to those people, getting the right intros at the right time. It's like a little bit of luck involved, but maybe this podcast can help. You're talking to the analysts of Dragonfly and Dune and everyone. Maybe you get some legitimacy through that. Maybe going non-Anon also helps. Who knows? But yeah, thanks so much for hanging out with us.
Thank you very much.
You've listened to the Index podcast. Thank you for listening. We'll catch you in 2 weeks. Bye-bye.
Crypto data wizards, come join us for the parade. From Bitcoin ETF to Solana meme coin trade, uncovering public secrets in the blockchain shade. Bad chiller, cherry picking liar. We call them out and set chart crime on fire.